Welcome to Breaking News to Trading Moves. Our goal is pretty straightforward. We want to help you get behind a headline quickly and really understand what the numbers might imply for the broader market. Today, we're looking at the travel and experience sector, specifically the very positive performance news that just came out from Carnival Cruise Lines. That's ticker CCCL.
That's right. And when a company like Carnival, which, serves such a wide part of the leisure market, posts these kinds of results, it gives you a pretty direct read on consumer behavior.
On how people are willing to spend.
Exactly. So today, we're going to get past that main headline, look at what the results are really telling us about the consumer wallet, and then lay out who the potential winners and losers are across the rest of the travel world.
Okay, let's start there. The core announcement from Carnival.
Yeah.
What were the numbers that got the market moving?
Well, the report was solid across the board. If you look at their fourth quarter, Carnival beat what analysts were expecting, but the bigger reaction was really about the future outlook.
The guidance.
The guidance, yeah. Management raised their full-year adjusted earnings per share, or EPS, forecast up to $2.48.
And that was above the consensus estimates.
Correct. Comfortably above what most people were modeling.
And the stock reacted immediately. I think it jumped over 10% after the news broke.
Yeah.
But you said there were a couple of other signals that were maybe even more telling than just the EPS number.
Yes, I think so. The first one, and you could argue it's the strongest symbolic move, was reinstating the quarterly dividend at 15 cents.
Okay, and why is that so important?
You have to remember, this is the first dividend shareholders have seen since before the pandemic, when the whole industry had to, just focus on survival.
Right, they were taking on massive debt just to stay afloat.
Exactly. So bringing back the dividend is a clear statement. It's about generating free cash flow again.
Got it. And the second point?
The second point was management's commentary. They were just exceptionally positive about forward-looking indicators, talking about strong momentum heading into what they call wave season.
Let's define that. Wave season. It's an industry term, not something most people would know.
Right. So wave season is basically the period from January through March, right after the holidays. It's when the cruise lines do their biggest marketing push to lock in bookings for the whole year.
So it's their most important selling window.
It is. If they have a good wave season, if they can set strong pricing and get high occupancy, a large part of their revenue for the year is, in a way, secured.
And Carnival was already seeing good signs.
That's what they said. They pointed to really robust booking volumes around Black Friday and Cyber Monday. That was seen as a very positive early indicator for pricing power.
So we have good earnings, the dividend is back, and a strong outlook. Now let's connect the dots. Why does this matter so much beyond just Carnival stock price?
It really comes down to what it says about consumer spending, about value, and where people are choosing to put their discretionary dollars right now.
Okay, so let's start with that idea of pricing power. Carnival showed they could raise their ticket prices, but people kept booking. Why is that?
Because the cruise itself, especially when you compare it to building your own vacation piece by piece, can almost act as an inflation hedge for a family.
How so?
Think about it. You book a cruise, and your room, your transport between islands, most of your food, and your entertainment, it's all fixed. You pay one price up front.
Right. You're not worrying about the price of gas or what a restaurant meal is going to cost in 6 months.
Exactly. So that bundled fixed price becomes really attractive, especially for that traveler who is determined to spend on an experience but still wants some cost certainty.
So the demand is still there,
right,
even at higher prices, because the perceived value is higher than the alternatives.
That's the idea. The demand isn't snapping back yet. People are motivated to spend on this specific kind of trip.
I want to push back on one thing, though, financial health argument. I mean, during the pandemic, the big concern was just the mountain of debt these companies had. Is this strong revenue just, covering higher interest payments, or is it a real return to health?
That's a great question, and I think the dividend really answers it. The market isn't just looking at revenue, it's looking at cash flow and paying down that debt.
So the dividend is a signal that there's cash left over after servicing the debt.
Precisely. It signals that they're generating cash beyond what's needed for their obligations. It moves the conversation away from, are they going to survive? And toward, are they growing and rewarding shareholders? That's a key message for investors.
That makes sense. Okay, so that sets the stage perfectly for identifying the beneficiaries here, the winners who might gain from this.
The most direct group, of course, is the other cruise lines and operators.
Right. A rising tide lifts all boats, so to speak.
Yes. And that's especially true in this sector, When one player proves the consumer is willing to accept higher prices, it gives everyone else more confidence.
So the good news for Carnival, CCL, is also a positive read for competitors like Royal Caribbean, RCL, and Norwegian Cruise Line, NCLH.
Exactly. The market sees the whole category as being validated. Now, moving one step out, you have the online travel agencies, the OTAs.
The big platforms that sell everything.
Right. They are a barometer for leisure demand. If people are spending more on travel, these platforms are right in the middle of it.
We're talking about companies like Booking Holdings, that's BKNG, Expedia, EXPE, and maybe TripAdvisor, TRIP.
Correct. And for them, it's not just about selling the cruise itself. It's about the whole package.
What do you mean?
Well, cruise bookings often lead to selling other things. You add flights, maybe a hotel stay before or after the cruise, shore excursions. These bundles usually have higher profit margins for the OTA than just a simple hotel booking.
I see. And then the last group of winners.
You have to look at the financial infrastructure, the payment networks that process all this spending.
So every time someone buys a ticket or a drink on the ship,
Every dollar spent on that cruise ticket, on the package, and especially all the onboard spending, it all drives volume for the card networks.
so they're kind of like the toll booth on the road to the vacation.
A good way to put it. We're looking at companies like Visa, Ticker V, MasterCard, MA, and American Express, AXP. For Visa and MasterCard, it's just about the total volume of dollars. For American Express, it's often more about their focus on premium travelers who are a core part of this market.
Okay, that lays out the winners pretty clearly. But for every winner, there's usually a flip side. If the vacation money is flowing so strongly to cruises, who feels the pressure? Who are the relative losers?
This is all about what we call the substitution effect. It's not that these other sectors are doing poorly necessarily, but they are competing for the same finite family vacation budget.
And first on that list,
Major airlines.
why them? People still need to fly to the port, don't they?
Some do. But think of the cruise as a self-contained vacation. If a family budgets, say, $6,000 for a trip and spends it on a Caribbean cruise, that money is gone. They didn't also buy 4 separate round-trip tickets to Florida or Mexico.
So it directly competes with flight or resort-type vacations.
It does. So it can create some pressure on leisure travel demand for companies like Delta Airlines, DAL, United Airlines, UAL, and American Airlines, AAL.
And if lodging is bundled into the cruise, I assume that leads us directly to hotels.
Absolutely. This is especially true for family travel. That same family of 4 might need 2 hotel rooms for a week. Plus, they have to pay for all their meals and activities separately.
So the cruise value proposition looks very strong in comparison.
It can, yeah. And that creates more competition for the big hotel chains like Marriott, MAR, Hilton, HLT, and Hyatt, which is just H. Their business travel segment is different, but the leisure side is definitely competing here.
Okay, so airlines, hotels.
Yeah.
What's the last category?
The theme parks and other land-based attractions.
This feels like the most direct competition of all.
I'd say so. It's really a zero-sum game for that discretionary experience budget. Is that family going to spend their money on a 5-day trip to a theme park, paying for tickets, hotels, and every single meal? Or are they going to choose the bundled cruise experience?
So when cruises are doing well, it's a direct challenge to them.
It is. It's competition for Walt Disney, ticker DIS, for Comcast CMCSA, which of course owns the Universal Parks, and for SeaWorld Entertainment, SES. They are all chasing that same big family-oriented vacation spend.
That really lays out the whole financial ecosystem around a single news item. So the Carnival announcement, it's giving us a clear signal that right now, consumer spending power in travel is focused on these high-value, fixed-cost experiences.
That's the main takeaway. And the final thought for you to consider is to always look beyond just the company reporting the news. When you see strong demand in one part of the experience economy, you have to ask what it implies for everyone else competing for that same dollar. And of course, we have to state this clearly. This discussion is not financial advice. It is not a recommendation to buy or sell any security we've mentioned. This is all purely opinion based on an analysis of public reports.
Thank you for tuning in to Breaking News to Trading Moves. We'll talk to you next time.